Hello everyone, this is Marshall Giller bringing you the morning comment for August 22nd. After several days of across-the-board gains, the dollar fell across the board yesterday. It was lower against all the G10 currencies, and among the emerging market currencies we track, gained only against the Brazilian real and Chinese renminbi. The weakness of the dollar was not justified by economics, which were uniformly supportive. Existing home sales, the market U.S. manufacturing PMI, the leading index, and the Philly Fed business outlook were all higher than expected and higher than the previous month, while jobless claims were lower. So the dollar's weakness was therefore probably due to investors' anticipation of dovish comments at today's Jackson Hole Economic Conference. In that respect, I think it'll be only temporary, and I think it offers good opportunities for setting up long dollar positions. Now, the best performing currency over the last 24 hours was the Norwegian krone, which soared on better than expected second quarter GDP figures. It's managed to maintain the gains into today. The report only confirms the other recent solid news from Norway, including both one of the lowest employment rates and highest inflation rates in Europe. The next monetary policy report, due out on September 18th, should therefore have a fairly hawkish view, for Europe at least, which is likely to keep the currency underpinned, in my opinion. As for today's comments, the calendar today is very light. No major indicators coming out from Asia, Europe, Britain, or the U.S., only Canada. In Canada, we've got the CPI coming out. It's expected to slow. Also, retail sales for June are expected to decelerate on a month-on-month basis. So both of those indicators are liable to be negative for the Canadian dollar. The big event today, of course, Fed Chair Janet Yellen's keynote speech at the Jackson Hole Economic Symposium. After Wednesday's FOMC minutes, which revealed growing pressure from the hawks to begin hiking rates, investors' attention will be focused on any possible change from her previous, relatively balanced comments regarding employment conditions. However, I wouldn't expect her to come out with much of a change in tone just a few days ahead of an employment report and a couple of weeks ahead of an FOMC meeting. Having said that, the market's prepared for a neutral to dovish speech from Yellen, so such comments probably wouldn't be market affecting. The risk, therefore, is that she says something more hawkish and takes the market by surprise. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX Global, wishing you solid trading.